Money FM 89.3. Best of breakfast. The U.S. Market Update with Money FM 89.3.
Good morning. Welcome to the U.S. Markets Wrap with me, Ryan Huang. Lots to talk about, especially when we see the Dow Jones Industrial Average down for a third day following President Donald Trump's tariff rollout, with the president threatening even higher rates against China. And the session last night was a wild one as traders tried to speculate when the market would bottom from Trump's tariff turmoil, with the Dow posting its largest intraday point swing ever. Trading volume also reached its highest level in at least 18 years. So just zooming in on the benchmarks now, the Dow dropped eventually 349 points to 37,966. That is around 0.9% lower. And this after falling as much as more than 1,700 points at one stage, and then swung up by over 2,500 points in what is a record reversal. The S&P 500 lost 0.2% to 5,062. At one stage, at its lows, it was down by 4.7%, briefly entering bear market territory. The Nasdaq Composite, on the other hand, inched up slightly higher by 0.1%. So it does look like there was some bargain hunting going on. So let's check in now with Sonu Varghese. He is the Vice President and Global Macro Strategist for Carson Group. Good morning, Sonu. How are you doing?
I'm hanging in there. It's good talking to you, Ryan. Thank you for having me.
That's a good way to put it, hanging in there. When was the last time you remember markets going through such a wild ride?
I think it was COVID, really, in March of 2020. Obviously, we saw some big declines in 2022, but I think that was a slow burn, especially as the market got into terms of the fact that, okay, inflation is more persistent than they expected, and so the Fed is going to raise rates more than they expected as well. So in March of 2020, things just collapsed really quickly. And I'm not saying that's where we will get to, but it feels like that.
Yeah. So to help us to make sense of this, because we did expect tariffs to come through, how much of an overreaction is this when you look at the market sessions and all the movements you are looking at in the current time right now? What is your takeaway so far from the current market session?
I think that was, just rewinding back to last Wednesday after President Trump made the announcement, which is probably Singapore time in the morning on Thursday. I think that was a shock, to be honest. I think it exceeded most people's worst case. It was the baseline, I think, expectation was maybe we'd get something between 10 to 20% in tariffs. And I think with 10 being, okay, we can live with that, 20, which is still a headwind, don't get me wrong, and 20% being most people's worst case. So you thought, okay, maybe if we may land up around 15%. But then what we got was way above that. So given that, and this assumes if the tariffs stay in place, I don't think this is a huge overreaction in terms of what markets have done. Essentially, the administration is looking to retool how America's economy works and retool the connections between America's economy and the rest of the world as well. So that is a big deal. And I think that's why you saw the market reacting the way it did. But I'm so optimistic that these tariffs will not remain in place, at least to the extent that they have suggested. I do want to point out that as of Saturday, we did already get 10% tariffs. U.S. Customs and Border Protection started collecting 10% tariffs on all goods coming into the country. So 10% tariffs, which was sort of like the base case, the kind of good scenario, is already in play right now, right? And that would be a headwind for, I think, the U.S. economy and markets too. I don't think that's recessionary by any chance. But now we just have to figure out, okay, how much worse will it get? And I think that's still up in the air. It's still fluid.
Yeah, so now walk us through the two camps of thought here right now. There seems to be a bit of a tug of war going on because we did see wild swings. And we saw, for example, the S&P 500 down by as much as 4.7% at its session lows. eventually just down 0.2%. So on one hand, you've got, I guess, people hoping that there might be a deal struck at the last minute and maybe for the tariffs to be even one-off in terms of impact. But on the other scale, or on the other end of the spectrum, we've got folks thinking, hey, recession is coming. Where are you sitting on the spectrum?
Since we don't know what exactly will happen with the policy, it is a bit of a game of chicken right now, I think, between the markets and the Trump administration. When the Trump administration goes all the way into saying that, we are not considering a pause on tariffs, we are not considering any change here unless we get really big concessions from other countries, I think the market goes down. And then we get some noise that, okay, maybe the Treasury Secretary is going to Japan to negotiate over there, so there's some positive movement. We've had calls with maybe 50 countries, and then the market rallies, right? And that gives, I think, the administration some comfort saying, oh, maybe it's okay. Maybe it's okay to have the tariffs. So I think that is the tug of war right now. So with respect to a recession, look, the odds of a recession are higher right now. But I think for that to manifest itself, we'll need to move into, the next few months to see, okay, what is the impact? What is the downstream impact of these tariffs? Are these tariffs being passed through as higher costs to consumers, or are businesses eating it in their margins? And maybe, some businesses, do they go out of business and lay off workers? And then there's a whole, negative feedback loop that happens there. But I don't think we'll know that until, obviously, there's some policy clarity, let alone, 1 to 2 months.
All right, Sonu, just zooming in on what you are getting in terms of data. So looking at what markets trying to price in, U.S. inflation swaps, for example, what is going to be the expected impact on prices?
I think prices, normally a tariff would mean a level shift up in prices, not necessarily inflation, because a one-time shift in prices higher does not mean, okay, that's inflation, unless they continue ratcheting tariffs higher every month or every 2 months, whatever it is, right? But the problem is consumers are already front-running the tariffs, right? They're going out and buying new vehicles, for example. Last month in March, U.S. vehicle sales clocked in at 17.3 million, which is higher than the pre-pandemic pace in 2018 to 2019. Over the last 2 years, we've struggled to get anywhere near that. And suddenly in March, we got well above that. It's the highest since April 2021, which means consumers are saying, you know what, we are going to buy a car before tariffs get in. Now, that's going to put pricing pressure on new cars. And now once the tariffs come in, once the dealership prices actually go up, I think the price pressure will move to the used car market, for example. And then, so it's staggered. It doesn't happen all at the same time. And then maybe a few months later, we see the impact of that on the services associated with the vehicles market, which is whether it's repair and maintenance, car rentals, insurance. We saw this over the last 2 years. We saw exactly the same movie play out. And we could see something similar play out across various other goods and services sectors as well. It doesn't all happen in one small window, let's say May to July or whatever it is, right? We could see a consistent staggered effect because of how consumers shift their spending, how businesses shift their spending, how businesses price contracts with other businesses, and how inflation data is calculated and, how we take in that inflation data as well. So it could look as if inflation's persistently high beyond just a small window. And I think the Fed is worried about that, to be honest, too.
Yeah, lots to worry about. And I think this is where investors are trying to figure out what to do here. What is the playbook here? Should you be buying stuff now? Because it did seem like bargain hunters were out in force to some degree, buying up some of the mega cap tech stocks.
Yeah, usually in big quick downturns like this, or even big recessionary bear markets, we usually see a lot of policy support coming in, whether you go back to, 1987 or 2001, 2008, 2020, you saw the Fed step in. In 2020, the Fed stepped in with a lot of credit facilities, liquidity facilities. You had the federal government coming in, Congress and the White House doing the CARES Act. Same thing in 2008. You had the Fed imposing, QE1. They cut rates to zero. And you had the TARP bailout as well, Troubled Asset Relief Program that Congress passed, right? So all of those policy support pieces were coming in, and I think that helped put a floor on the market. Right now, I don't think the policy from the White House is supportive of the market. The put price, the strike price on the put from the White House, that's lower. And because the Fed is constrained by inflation, they're also sitting kind of on the sidelines, right, despite this big market pullback that we've had. So I think that's what's slightly different. We, as for our portfolios, over the last several months, actually, we've been moving chunks of the portfolio, equity exposure, into more defensive equities. And right now, that's how we're positioned. We're not looking to make any quick moves because we're not sure how this will play out. Like I said, the situation is very fluid. And it also gets to we're trying to figure out what is the Trump administration asking of its trading partners, of America's trading partners. If they ask us, you need to reduce your trade deficits to zero, that is going to be very tough. Not to mention the fact that it's going to be very tough to negotiate that within 3 or 4 days, let alone even a month, right? Whereas if it's more like, you need to reduce your trade barriers, like your tariffs to zero, and then we'll move on, that's a little more optimistic. That's a little more positive. So that's what we're looking for, if that makes sense.
Yep. Where is the floor right now? Hopefully we get more clarity in the coming days. We've been in conversation with Sonu Varghese. He's the Vice President and Global Macro Strategist at Carson Group. Sonu, thanks for your time and insights, and hope you have a great rest of the week.
Thank you very much.
All right. Catch up with you again soon. Stay Money FM 89.3.
Before acting on the information on Money FM, please consider if it's suitable for your own investment objectives, financial situation, and risk tolerance. To listen to more great interviews, download our podcasts at audio.sg or download the audio app. That's AWEDIO, audio at the App Store and Google Play.